100% is what the car's worth,
Right.
and you own it for 125%.
Right.
Should the vehicle become a total loss for whatever reason, and they pay you actual cash value today, they're only going to be paying you the 100%,
That's right.
which means the loan is not going to be fully paid off. And that's all they owe is actual cash value.
Hello, everybody, and welcome back to another episode of the airing of Grievances. My name is Reamer. That's Robert Grieve. And as always, it's a privilege to have you join us. And if you're watching here on a Saturday morning at 9:30 a.m. in the Mountain Standard Time, hopefully you're chatting with us live as well through the YouTube app. We appreciate that very, very much.
We really do.
Rob, first of all, happy Saturday to you.
Happy Saturday to you.
Yeah.
My dear friends, thanks for tuning in and hanging with us. We appreciate you, each and every one of you.
Absolutely. Hey, listen, let's just a little bit of house cleaning here. If you haven't clicked the thumbs up, if you see something that you like, something that you appreciate, the work that we put into these, we would love it if you put in a little good word for us to the YouTube algorithm by clicking that thumbs up. And if you haven't subscribed, well, subscribe. That's it's free, and it helps, again, the channel, supports the channel. We appreciate that. And perhaps more people, sometimes people see these videos and it makes a difference in their world. We've received
many times.
Right. We've received a number of different emails and comments from people that say, hey, this made a difference. I didn't know. So yeah, we appreciate that very much. Rob, last week we talked a little bit about the crash report that took place in it came out, it used to come out once a year, now it's coming out quarterly.
Right.
And there are so many things involved in this 80-page report or plus.
Tons of just impactful information.
Yeah. So we thought we would talk a little more about something that's super relevant to you.
All of us.
Yeah. Why are my premiums, my insurance premiums, constantly going up?
And at the rate that they're going up.
Yeah.
I mean, big jumps.
Yeah.
Big jumps for all of us.
So
me included.
You've been spending the last couple of days swimming in the crash report.
Yeah, data.
Whew.
And I figured, there were some interesting things in here to, I'm not cheerleading for the rate increases, trust me when I say that, but there are some things that they brought to light, and this is certainly not conclusive.
Sure.
But it's, there's lots of things in here that maybe you don't know.
All right.
That they deal with that we don't realize that they deal with.
They being the insurers.
They being the insurers.
Okay.
And some of the stuff we can impact, some of the stuff we can't. When Mother Nature does her thing,
yeah,
there's not much to do other than find shelter.
Yeah, I remember it wasn't but a year and a half, 2 years ago, I guess, when fire ripped through just outside of Boulder here in the Denver, Boulder area in Colorado, and 1,000 homes went up in 12 minutes.
Gone.
And
1,000 lives were ruined.
It's certainly altered for sure.
Yeah.
And they're still dealing with those kinds of things.
It's not done yet.
But because of those kinds of things, floods, hurricanes, natural disasters of any sort, those kinds of things are definitely going to have an impact on local, regional, and sometimes even national
ratings.
Rates.
Sure. Yeah, absolutely.
Yeah.
So, and this report has its own stuff that it gathers from estimating systems, the estimating system CCC.
Yeah.
which is really, in my opinion, the prominent one that's used both by insurers and by collision repairers.
Okay.
And they garner tremendous information to aggregate
Sure.
from these repair plans and estimates and
Mhm.
so on and so forth. But they cite other sources of information that support
Yeah.
what they're finding.
They did their due diligence, and it's not just them saying this is our opinion.
Right.
It's supported by a number of other resources and documents.
So one of the first things I noticed in here, and this is from APD Trends Summary.
Mm-hmm.
So they're citing a different source
Yes.
in their report. According to November's Insurance Information Institute and Milliman forecast, the property and casualty insurance industry is expected to end 2023 with a net combined operating ratio of 103.9%, marking the second consecutive year of profitability challenges, driven mostly by weather-related property losses, personal and commercial auto, and the slow pace of taking additional rate needed to offset the losses. So that was a lot of information in one little paragraph.
It's a powerful paragraph right there.
But they're saying that their net combined operating ratio is 103.9%, call it 104.
Sure.
At 100%, they make no money.
Right.
So what they're saying here is they're losing 4%. So that number in an average year, let's call it, I'm going to just suggest that is probably 96, 97%.
Right. So they're making a 3% profit margin.
3, 4, maybe.
Yeah.
And, that doesn't sound like a lot, but, and it's 4%, you can't, if you're not making money,
Right.
then you may not be able to satisfy contracts and so on and so forth. So we need the business to make money.
Right.
That 4% or the 3 or 4% in either direction is times billions of dollars.
Right.
It's
right.
It's a significant number, and while you may look at it and say, well, they're only losing 4%.
No big deal.
Yeah, well, that's in the billions
Yeah.
of dollars, and in the same way the other way when they're making money.
Yeah. It's not just your policy they're reporting on.
Yeah. Exactly.
Okay.
So, and they named a lot of reasons why that they're struggling to make that profit.
Sure.
Because they're paying out in heavy claims and stuff like that. I believe they probably have some operating categories that they could adjust to.
There could be some
change.
Could be some flexibility in there,
Yeah.
whether or not they choose to exercise that or not. This is what they're reporting.
This is what the report says.
Yeah.
I didn't say it.
Got it.
So, they talk about the last thing is the slow pace of taking additional rate needed. In other words, applying to the Department of Insurance for additional rate hikes.
Right.
Some companies are extraordinarily good at that. Other companies, they kind of wait a little bit, but they can't just get the money. They can't just raise your rates. It has to be approved.
Right.
And once it's approved, they have to wait for your policy to lapse in order to put that
Execute the rate increase.
the rate increase.
Well, and you mentioned something there, and I think it's important to draw more attention to it, and that is that insurance is a regulated industry,
Yes.
right? And so, no matter how you or I feel about it, the fact of the matter is that they can't make unilateral decisions. And,
No.
and on the rare occasions when they try, trust me, the regulatory authority is there to remind them of the pecking order and how this works.
So there is that. So with all those things, one of them was the auto side. I'm going to just do a quick hit on the auto side.
Okay.
Of the losses, and cars are expensive to repair today.
It's true.
And they're expensive for a lot of reasons. They cite in the report more parts usage in repairing the vehicles, and the parts are more expensive than they've ever been.
Yeah.
and that's if you can get them. Uh, labor costs. Labor costs have gone up,
Sure.
and they're more expensive. And then we have the increasing diagnostic and calibrations part of this, which is, I don't want to say new on the scene, but it's getting more and more robust every day as these cars get more complex.
It clearly is, and we've talked a lot more recently about these as the diagnostics continue to dominate the storyline of so many things
Yeah.
in our industry.
Yeah. And just to support that, they cite a AAA survey that said that whole diagnostic and calibrations piece of it can add up to 37.6% to the repair cost all by itself.
That's a significant increase.
Yeah. So now, did the insurers figure that before it actually happened? And are they paying for it before they got the rate increases for it? That's a way above my pay grade.
Lots of questions.
In addition to that, it's taking a long time to repair the vehicles
Yes.
because of the diagnostics, the calibrations, the acquiring the parts necessary. So the LOR, or length of rental, is also expanding. So make sure you have good rental coverage on your policy, the most
Absolutely.
robust that you can get. And I know that's asking a lot with the rates going up the way they are to add more to it, but it's not a significant add.
Right.
So why are these cars getting so damaged? Speeding related fatalities increased 19% between 2012 and 2021. That's people no longer with us. And it is because higher speeds. So another AAA source, and they do this often, ask people to be honest. And the question, have you driven over 10 miles an hour over the speed limit? 35% said yes, 10 miles an hour. That's going to be critical coming up in a little bit.
Okay.
Driven 15 miles an hour over the speed limit, 49%. Driven while manually typing or sending a text message or an email, there's another 28%. And I'm willing to bet that might be happening at the same time that we might be 10 miles an hour over the speed limit. And driven while reading a text or an email on a cell phone, 38%.
Yep.
So you're going to find a theme throughout this whole report of why the damage is so bad,
Sure.
so much worse than so much worse than before. So going on, most ADAS technology, advanced driver assist systems, emergency braking, blind spot monitors, cross track, lane keep, all of that stuff.
Adaptive cruise.
All that technology is designed to avoid accidents altogether at lower speeds, and in aggregate tends to result in accidents that are less severe. While ADAS can prevent some accidents, particularly those at lower speeds, an ADAS-equipped vehicle exposes more electronic components and parts to damage at higher repair costs.
Right.
And the faster you go, the less that stuff can do.
Yeah.
So ultimately, improvements to road safety require a more holistic approach that combines technology, education, enforcement, and changes in driving behavior. As speeds increase, the systems can only mitigate speed before impact. In other words, it's not going to stop the car if you're going 60 miles an hour.
Right.
The best it could do is possibly
Slow it down.
slow down the vehicle so the impact isn't quite as hard.
Right.
Miles driven are 2.1 year over year through December. So miles driven, they somehow know how many miles are driven in the nation
Right.
every year.
And they've increased. We're
They've increased.
driving farther by 2.1%.
Yeah. or more often, or whatever the case may be, through December for 2023. That's only up slightly. However, dangerous driving behaviors, speeding, distracted driving, running red lights, and drivers under the influence continue to plague America's roadways.
I see it every day.
And we see the cars coming in here, and thank God we're able to talk to the people. Let's talk about hail claims for a minute. Another property and casualty, expense. Hail claims accounted for 12% of all comprehensive vehicle claims in 2023, up 6.8% from 2022.
Wow.
That's double.
Yeah.
That's double. Repairable claims estimated through CCC was $2.3 billion for 2023. And that does not include vehicles that were totaled.
Right.
That is repairable vehicles.
Right.
There were many that were so bad that they were totaled.
Sure.
So it's not just auto, it applies to home.
Mm-hmm.
In 2023, severe convective storms in the U.S. accounted for $58 billion in insured losses, and they talk about the rising population being a factor as opposed to increase in storm frequency. And what they're talking about here is we're building lots of houses.
Sure.
And there's more people,
Yes.
more houses, more roofs, more everything. And that was, so the storm that came down and there was only 100 houses,
Right.
and now there's 300, that's a lot more roofs to
Insure.
insure.
Yep.
So there's the hail side of the equation that is twofold. It's property, but it's your car
Right.
and your home.
Yeah.
And, maybe you have sheds and, other things that go along with that.
Bet.
Then we have inflation. Increasing inflationary pressure have meant higher costs for insurers who have raised rates to combat major hits to their profitability and to account for the rising costs of insuring and repairing vehicles as previously discussed. The December Consumer Price Index for motor vehicle insurance is plus 20.3% year over year. So rates have gone up 20.3% on average.
Wow.
36% compared to 2019.
Yes, that feels about accurate.
Yeah, it's and then inflation for all items has increased 35.3% since January of 2012.
I don't know
So
about
there's
you, but I haven't got a 36% raise.
No, I definitely have
in a
not
very
got
long
that. No. So there's an inflationary pressure, and let's talk here. We're all experiencing the price of eggs, how much chicken costs, what it takes to put gas in the car,
You bet.
tires. Every single thing we touch is more expensive than it was.
Yep.
It's not just for them, but we don't get to get a rate increase.
Right.
So let's talk about new and used car prices.
Oh, yeah, there's an interesting topic. I don't know about you, but I have purchased a new vehicle over the last couple of years. My son has purchased 2 new vehicles over the last year.
I haven't purchased any new vehicles.
We feel what's happening. And when I say new, I mean new used.
Yeah.
Right?
Yeah. New vehicle prices, which averaged $40,000 at the beginning of 2021, increased steadily until peaking at $49,000, so another $9,000 in December of 2022.
That's a 20% increase.
That's a
over
big
12
increase. So if they total a vehicle, it's more expensive
Sure.
to replace that vehicle. Used vehicles began 2021 at an average list price of $21,000. By December of 21, they were at $28,000, a 30.7% increase.
Yes.
So there's a problem. It's a problem for us too,
Sure.
because we're paying more for, a vehicle. So while we're paying more for new and used vehicles, and during the pandemic, new car places were adding premiums onto vehicles because there were hardly any on the lot. So if
Correct.
you wanted this, you were going to pay more than MSRP for it. Used vehicles went through the roof.
Unbelievable.
And so people buying used cars over the last couple of years have spent a lot of money on them.
Sure.
But that creates a new problem for today that we actually experienced recently. But let me just read what they're talking about here. They're talking about the prices of used cars starting to relax and come down a little bit.
Okay.
That's good news and bad news. It's good news if you want to buy one. It's bad news if you've already bought one.
Yeah.
So while these appear to be promising signs for consumers, used vehicle price volatility is not without its pitfalls. In the current economic conditions, as used vehicle prices continue to decrease, the possibility of consumers being underwater due to unfavorable loan terms increases. So TransUnion reported in the first quarter of 2023, used vehicle loan to value LTV ratios averaged 125%, up from 110% in 2022.
Wow.
So 125%. That means that 100% is what the car's worth,
Right.
and you own it for 125%.
Right.
Should the vehicle become a total loss for whatever reason, and they pay you actual cash value today, they're only going to be paying you the 100%,
That's right.
which means the loan is not going to be fully paid off. And that's all they owe is actual cash value.
There is a silver lining
Sometimes.
if you choose to enact it. Yeah?
Yeah.
Talk to me a little bit about gap insurance.
Here is where gap is very important. Gap insurance, if you have that on your loan and your lease, that will take care of that 25%. That's another insurance product that takes, you're insured up to the 100 through your auto insurance.
Right.
The gap takes it from the 100 to the 125.
Right.
If you don't have the gap insurance, you're going to be owing that extra money and not have a car.
Sure. And if you're talking about a $40,000 vehicle, it's a $10,000 deal.
Yeah.
And gap insurance doesn't cost $10,000, but it can cover your butt in a big way if that car gets totaled.
So we just had a vehicle in here, and it was like a 16 Lexus, and the damage on it exceeded the value of the vehicle. They bought it almost 2 years ago, and their loan is $6,000 short. What the value of the vehicle is compared to the value of their loan, they've got to come out of pocket $6,000 in order to settle the claim. They had gap insurance.
Oh.
Don't be that person that doesn't.
They lived.
Yeah. And if you have a vehicle used that you bought, you should look up on NADA and find out what it's worth, NADA.com.
Yep.
Check what you paid for it or what your loan balance is. And if it is different, and you may want to look at doing gap insurance. So the way to do that is interest rates are also starting to come down.
Yes.
Not quickly, but they're coming down. Refinance the vehicle and put gap on it.
That's wisdom right there.
Because there's another reason you may land up with a total loss, which isn't a total loss. Your car is stolen and not recovered.
Oh,
So, according to NICB, and I believe that's the National Insurance Crime Bureau, more than 500,000 vehicles were reported stolen in the first half of 2023. That's an incredible amount.
it's trending for 1 million vehicles in that year.
Yeah.
That's amazing.
And if you're in Illinois, it's 38%, 20% in New York. It's all over. This is on the heels of 1,967,000 auto thefts in 2022. So it's trending right about the same, which is the most since there was 1 million stolen in 2008. That's if your vehicle isn't recovered, you're going to get paid actual cash value, which may not satisfy the loan.
Right.
Okay. The other thing is maybe the car does get recovered and it's had drug use that makes it a total loss.
Take a look at this video up here that I'll also post below. We've got a couple of videos on if your car is stolen and recovered, whatever you do, don't get in it until you've had a drug test.
Yeah. So, those are things that are adding to insurance, what they're paying out,
Sure.
that maybe they figured in the rates, maybe they didn't figure in the rates. Maybe, none of us have a crystal ball. I mean, they can see the technology building, but they don't understand necessarily what it's going to cost to actually fix.
Right.
And all the expense that we have to go through as repairers to purchase the equipment and train the people and have the space, because these calibrations and all these things take up tremendous space.
Yeah, it's not just like plugging something in and reading a computer. You have to have the distance in order to actuate the calibrations.
Yes. So then there's property. We call it property and casualty. Property is your physical property.
Sure.
Casualty is you. Casualty is the person.
Yeah.
So this is what they had to say about casualty. The prevailing theme for casualty in 2023 has been a crystallization of the new normal post-pandemic injury and treatment trends, which are primarily focused on two areas: impact severity and indicators that remain elevated due to persistence of risky driving behaviors, including speeding and distracted driving, despite improvements in vehicle safety technology for newer vehicles, and emerging treatments patterns for those involved in injury claims. So we talk about severity.
Yeah.
The faster you're going,
The more damage you'll
the
do.
more damage you're going to do to the property. If there's people inside of that property, there is likelihood, the faster you're going, the more likelihood that there's going to be personal injury involved as well. Fixing people is a whole lot more expensive than fixing cars.
Without question.
So, when you look at repairing a car and maybe it's going to be $20,000 to repair a $100,000 car,
Right.
and you say, wow, my God, that's so much money. Go get a CAT scan.
There goes your 20 grand.
So they talk about many of those types of things in here. CCC shows data impact severity remains elevated at 7.1 miles per hour. That's elevated. So they know what the vehicle impact is at miles per hour. How that happens, I don't know. Some delta V something or other. But they happen to know that. Remember, in the beginning of this video, we talked about if you're going 10 miles faster than the speed limit or 15 miles faster than the speed limit.
Right.
This is saying that an elevated impact severity remains at 7.1 miles per hour. So that's an average. Some are going to be more than others.
You bet.
Uh,
And almost half of the population admits to going 15 miles or faster over the speed limit.
right. And so if that results in an impact, and if you're going 15 more miles over the speed limit, and they're talking about 7 miles, people are going to get hurt.
Yes.
Because the systems that are in the car cannot compensate properly the faster you go.
Right?
I mean, they're just not designed to. They're designed to do it at slower rates. So the average amount paid out on third-party bodily injury claims have also steadily increasing. Over the last 4 years, it's been as significant as 35% increase. And that's in bodily injury claims. That's an important thing to know.
You bet.
Because, again, if you've got a 35% increase in the most expensive thing, and also long-term in many cases,
Yes.
which the longer term it is to recover, the more money they're spending, unless you hit limits and your policy doesn't have any more money.
And then you are out of luck.
Yeah, there's lots to think about here. So they cite CT scans. The average charge for a single CT scan procedure has increased 43% since 2019. You would think those come down with all the technology and stuff like that. Usually those things...
My VCR came down.
Yeah.
Yeah.
But inflation. The place that has these machines, the machines cost more money, the maintenance, if there is some, the building that it's in, the taxes on the building, the people.
Never mind the fact that they know that you need it.
Yeah.
Right? It's not something whether or not it's a convenience for you. If you need a CT scan, you need a CT scan.
Right. And so the average charge for a CT scan has increased 43% since 19, with some increases at state level even higher. So depending on where you are, and if it's rural compared to metropolitan.
Yep.
And while the average number of unique CT scans per injured party has increased 9% over the same period.
So not only they're more expensive, but they're doing more of them.
Yeah. Then we have new therapies, if you will, for helping people heal.
Okay.
That they've not been involved in before. So PRP therapy is a form of regenerative medicine that harnesses and amplifies the natural growth factors found in human blood cells to help heal damaged tissue. I've had this done. What they do is they take the blood out of your arm, it goes into a machine, spins it out, and then the product that it comes up with, at the end, they inject back into wherever the area is, hoping that will boost the repair, basically.
Okay. All right.
PRP has risen to the 6th highest surgical procedure by cost severity in 2023 by a 500% increase since 19.
Wow. Wow.
Did they anticipate this? It's, these are the questions, as to why these rates are going up. And then this is a really big one, folks. Uninsured motorists.
Yeah.
The Insurance Research Council reported that 14% of drivers are uninsured, and J.D. Power reported that 5.7% of American households with at least one vehicle do not have insurance. Factoring in the aging car park, consumers with older vehicles could be more prone to increasing deductibles, dropping first-party coverages, that's comp and collision, rental, and all those types of things, decreasing policy limits, or electing to go without insurance altogether. So that's the inflation thing again. it's a double-edged sword because we're paying more for everything,
Right.
and we're trying to find that we're not making that much more in order to afford it. So some things have to go.
Right.
So we reduce our policy, or we
Stop
just
paying.
don't pay for it, and it's creating choices that are not good for any of us.
Yeah.
As noted recently in J.D. Powers, the number of uninsured motorists in the U.S. is increasing. CCC observed similar increases in the percentage of third-party claims submitted for injuries caused by uninsured or underinsured motorists since 2019, a 40% increase in uninsured motorists.
Wow.
Uninsured motorists. There are two types, and talk to your insurance agent about this. I'm not an expert in this.
Okay.
There are two types of uninsured motorists. One covers medical, the other covers property. So, and you could have different tiers. So, I carry $500,000 uninsured motorist coverage for both property and injury. If you don't have it, could be a problem, especially if you're hurt. So they just cover things to watch out for in 2024. Impact severity, it's been a common theme throughout it. This is something we can control by
Slow it down.
slow it down a little bit, stay off the phone, pay attention to the road. You know, these are all things that we, none of us are perfect.
Yeah. and I'm going to
But there's some people out there that I see blowing red lights that I'm just like, oh my God, I
Yeah.
can't believe that.
I'm going to jump in and say, you can do your part by slowing down and staying off the phone and whatnot. But my dad gave me some great advice, and that was to keep your head on a swivel and be aware of your surroundings.
Yeah.
If somebody's coming up on you and they're really, like gaining on you quick in that inside lane, hey, pull over. It's not gonna hurt you to do that. Let them get out what they're gonna get out, and try to avoid that. It's another part of the equation.
So what they just point out in impact severity, elevated impact severity indicators such as delta V, that's the speed, airbag deployments, and whether they finally return to pre-pandemic levels. So it was better before. We weren't having this problem before the pandemic,
Yeah.
not to this degree. It has escalated substantially since the pandemic. Speeding and distracted driving trends, which could continue to offset advances in ADAS and vehicle safety. Again, don't count on these systems. The faster you go, the less you can rely on. Most they're going to do is slow it down a little bit,
Yes.
and possibly, deploy airbags and seatbelts and so on and so forth. Affordability. The population of uninsured and underinsured drivers continues to grow, along with auto premium cost pressures, leading to more UIM claim submissions and exhausted first-party benefits.
Yep.
So in other words, you have limits. Let's just say my limit, I said, was $500,000.
Right.
What if I need $1 million worth of treatment? I only have $500,000 set aside in the policy for that.
Yeah.
Some people don't have it at all.
Right.
Some people have $100,000. $100,000 isn't going to get you 3 scans. It doesn't look like.
Right.
That sort of thing. Treatment trends. They talk about the inflated radiology procedures and emerging treatments such as platelet-rich plasma. There's a lot of that going on. And then cost severity, third-party auto medical costs. I mean, if you hit somebody, throw up one of those pictures.
Yeah.
If you cause that damage and somebody's hurt, it could be really, really bad for you personally. So that's what I have for today. It's just a lot of stuff
It is
to
a lot.
unpack.
Yeah.
But it's just some of the reasons our rates are going up so dramatically.
Yep.
according to this report. I, I also have my own thoughts on that, but this is what was in print. I thought I would point out some of these things. I thought they were interesting.
Please don't kill the messenger.
And I'm sorry to take you so long today.
No, it's good stuff and it's important stuff. If you found it important, please remember, click the thumbs up. If you haven't subscribed, we'd love to have you as a subscriber to our channel, and share this with somebody who might need to hear these things, including your children. If your children are driving, you know that they have the technology, you know that sometimes they can tend to exceed the speed limits and whatnot. Send them this video and tell them that you love them. That's a great way to share that.
Amen to that.
Yeah.
For that, happy Saturday to you,
You.
my dear friends. Thanks again for tuning in, hanging with us. I hope it was valuable for you. I'll see you next Saturday. God bless. Have a great week.